This episode may come as a surprise to most of you. To some people it might be a good surprise, to some people it might be less so. I'll begin by saying that I have not at all forgotten about you. I did have a couple of episodes that were meant to be published last week and the week before, but with that said, the absence has to do with my fucking video editor program that all of a sudden refused to export my work. Yet for some reason, these simple ones where I just film the screams seem to work out well most of the time. I have gotten myself a new editing software program thanks to Johan and Ludwig, two people I'm engaged in a very interesting project with, a trading related one that will eventually be revealed in full. So thank you both for helping a tech dinosaur like myself out in this matter. With that said, it will take some time to master the new editing software, and that time I don't necessarily have an abundance of. In the meantime, however, I will experiment with something that's been on my mind for quite some time already, namely ad hoc episodes like this one. I've done a few already for AUGERE, for whom I produce 2 Bitcoin and crypto episodes a week. It should be a shaky start here, for I have no experience whatsoever in doing these kinds of things. I'm not a spontaneous person when it comes to making stuff up on the go. Yet I hope you'll be patient with me, and perhaps before we know it, these can be up and running in no time. The benefit with these is that they can be produced in no time, so that whenever anything of technical value pops up, it can be immediately covered. The downside, however, is that they're ugly and of much lower quality and structure than the ordinary ones. This, however, doesn't mean I will entirely replace the former ones. With that said, please let me know in the comment section below how this episode is received, or simply vote thumbs up if you like it or thumbs down if you think it stinks. Now, as I mentioned, I did have a finished raw episode on Marathon, one that refused to export, but since then a lot has happened, so it's old news anyway, and for that reason it will not be published whatsoever. I'll try to cover most of the relevant stuff in this episode instead, but before that, please note that nothing of what I said is financial advice. And again, if you like this spontaneous concept, then please let me know by hitting the like and subscribe buttons, and let me know in the comment section below. If it's not well received, I will not continue doing them. Simple as that. First of all, since the technical breakout in Marathon versus Bitcoin, Marathon literally flew off the handle and outperformed that of Bitcoin by 30% in just a week. And our Marathon entry at $60 was up by 37% over the same period of time, namely a week. And then came yesterday, the ugly yesterday, by which the price plunged down by 27%, and that's from whence we'll take this episode. Now, who the hell said trading is easy? If you don't have ulcers after a few years on the market, you're doing something very wrong, or perhaps something very right, I don't know. Yet with that said, some things one cannot simply prepare for. Yesterday's drops was news-based and could have happened in any company. We've all seen it, we've all experienced it. Yesterday it happened to Marathon. Now our job is to distinguish what will happen from now on and how bad the damage actually is. In this sense, the drop in Marathon was in Marathon alone and not in any other mining companies such as Hut 8 or Riot. Now, does this change things, the fact that this was a news-based drop and not a technically based drop? Well, we don't really know yet, and this is for the future to pan out. But in order to get a more holistic understanding, we will need to take a good look at Bitcoin to understand what's going on. Now, to begin with, Bitcoin is still above this key horizontal support zone, and this is a really important one. Yet with that said, there is some emerging weakness in the short to mid-term. The RSI on the daily, for example, is struggling to break above the upper bearish blue line. This here wasn't an upper bearish blue closing, it's too far away, yet it doesn't convey any short to mid-term confidence. And the same goes for the 4-hour chart, that does in fact look much weaker. First of all, Bitcoin failed to even get close to the upper bearish blue line, after which it then broke down and is now hovering below the lower bearish blue. This is super weak. For make no mistake, the scenario would have been entirely different if the RSI were to stay above the lower bullish red in one way or another. But now it doesn't, and this on its own is a warning of caution. If we go back to the daily chart, another thing we need to factor in is that we've had 2 recent new all-time highs, both of which were marginally higher than the previous one. And what this bids me to worry about is that we'll get something similar to what we got here. In this sense, for example, in this rising wedge, we had a 3-point RSI divergence before the price plunged down by 55%. Thus far, we have a 2-point RSI divergence. And if the price were to manage to make a new all-time high, however marginal, and the RSI were to make a 3-point RSI divergence, and ideally closing on the upper bearish blue from below, we might be in for something similar. Yet let's not be overly cautious before it's happened. It's only something I wanted to point out to you to have on your radars. Though the reason why I don't find this to be too likely is because we're still trading at the same price level as we did 9 months back in time. Thus, in essence, we've had a 9-month-long time-based correction. And mind you, this is all while we're still in a bullish primary trend. And in the midst of this time-based correction, we also had a 55% price drop. So if this here is not enough in terms of price and time correction or punishment, however you want to put it, as into a mass power for 6-figure bitcoins, then I don't know what is. With that said, I don't exclude the possibility of further downside. I'm just saying that the longer we can stay above this key support zone and this pivotal bottom at $57,500, the longer and stronger a consolidation we will have after this 130% upwards move. In this sense, Bitcoin is currently on the fence for a make it or break it decision. In the short term, it actually does look really weak, but mind you, that can change fast, and that's our job to keep an eye on. And additionally, Bitcoin is still well within this ascending channel. I certainly don't exclude a retest of the channel bottom before taking off. And that could be exactly why we're seeing short to mid-term weakness. That doesn't mean Bitcoin will plunge a lot, for if we were to retest that channel support, we're talking a downside of around 10%. With that said, the ideal scenario for Bitcoin would be if it were to reach this spot right here, as in where the ascending channel and the horizontal support meet. This would serve two purposes. First of all, we would have a long consolidation after this upwards move, and secondly, it would be a doubly technical support cluster. With that said, I'm not gonna lie, Bitcoin is tricky at the moment with its marginally higher highs and with its short-term fragility that could take us down here, but this doesn't mean it will stop there. If we were to get down there, we could just as easily plunge down further. For those low to mid 20,000 flat correction targets are still in play, whether we like it or not. Though having said that, the longer we can stay above this zone and move sideways, the less likely such flat would become. Let's now move on to Marathon. Yesterday's capitulation was a nasty one, hands down, and I will remain cautious from now on. Yet given the technical ambivalence on the markets as of now, it is very difficult to make a proper decision. Though the major factor that does make this entire situation so much more complex is the fact that we did have a breakout in Marathon versus Bitcoin. This then resulted in a fake out, and now that fake out in turn is back above the neckline again. This may not show properly on the daily chart, but if we move on to the weekly chart, it should clear the picture from there. Hence, what we see when we take a look at it from the weekly chart is that we had our breakout and that we're now testing it from above as a potential kiss and buy, which in turn is a bullish signal for further upside to follow. And one thing that certainly doesn't make things easier is this diagonal trend line. This has been altered already, and as anyone knows who's followed this channel for some time now, I really don't like diagonal lines. I'll still use them, I'll still look at them, but I will never ever base any trade on them alone. In this case, the way this line was initially drawn was like this. In this case, we had 3 touches that confirmed it technically, and then this week we opened and tested from below as resistance, after which we got rejected and dropped down. In this sense, if this were to be the correct line, then this line will again constitute resistance if we were to get a kiss and buy. The problem with this diagonal line is that this one is also technically correct. And this is what makes diagonal lines discretionary. However, that doesn't mean that they're all correct, for only one is. The problem with diagonal lines is that we usually only know which one is correct after the price has taken off and left. In this sense, they only come across as obvious in the aftermath. And that alone makes them so much more deceitful. And the same goes for Marathon. If we look at Marathon on the weekly chart, we see that we have a technical support laying right below Marathon's current price. However, this was not always the case. On a good note, however, if we look at the RSI on the weekly, we can see that it's currently testing the upper bearish blue from above, which is a sign of immense strength. And this is one of those things that speak against Marathon being ready to plunge down once again. With that said, it does require Marathon to stay above it, otherwise that whole thesis goes down the drain. Yet however strong the RSI may look on the weekly chart, it doesn't by any means take away the short-term weakness and drama in Marathon. Now if we zoom onto the 1 hour chart in Marathon, given Bitcoin's very weak short-term technicals, I will treat this move here as a bearish continuation. And with that said, I'm strongly in favor of releasing a good chunk of my position until things have cooled off a bit and things look sunnier across the board, in Bitcoin in particular. For given the technical characteristics thus far, as in with a steep plunge and a steep recovery, this to me looks like a bearish continuation in the making. And especially if we take into consideration what's going on with the RSI, where we're seeing a very weak development, to put it mildly. Now with that said, how far then can we expect Marathon to retrace if this were to be a bearish continuation? Well, if we draw a fib, we can see that we're currently trading right at the 2361. If this were to be the rejection, then we should expect for serious plunges to continue. Now if this were to be the reversal point, then we should expect for some serious downside to follow. Because if Marathon were to not have more strength than to surpass the very first fib level, then that means the bulls are entirely out of steam. For this reason, I will keep this area at close scrutiny. If, however, the price were to continue up to the 382 or even better the 0.5 fib, that would make me more at ease, and this on its own would act as a statistical technical clue that this ascending channel would act as support. Given the immense short-term weakness in Bitcoin and in Marathon, my action plan for now is to get a good sell price. Hopefully I should be able to get out at around break even of $60, but I still hold it for likely that we'll reach the 0.5 fib at around $64. And the major thing that speaks in favor of this is this little baby, the inverted hammer candle, a bullish reversal. Yet with reversal, this doesn't mean it's all sunny and good to go, it just means that we might be in for a fairly steady recovery before continuing downwards. This just means that we at least might be in for some steady recovery in the upcoming 5 to 10 candles. And to those of you who don't know, a candlestick prediction usually is for 5 to 10 candles to follow. With that said, if I were to be lucky enough to get out scot-free at break-even or a tiny profit, it doesn't mean I'm all out from there. It would just be the ideal short-term time to release whatever needs to be released and then to sit on my hands until the war smoke scatters. For who knows, if Bitcoin and cryptos in general were to turn bullish overnight, then I will be right back on the horse again. The tricky part at the moment that really makes things complex is the fact that this fake out is now back again above the neckline. On that note, the benefit with these fast analysis episodes is that I can keep you all in a more continuous loop, so please let me know what you think.